Now, currencies in Asia have been falling against the dollar, factoring in concerns of a prolonged trade war between the United States and China. The renminbi also weakened despite the central bank's efforts to stabilize it, with the Chinese yuan touching its weakest point in over a year on Friday. The People's Bank of China imposed a reserve requirement on foreign exchange contracts, and that's really aimed at discouraging bets against the yuan. The Chinese currency has lost some 8% against the US dollar since March. Well, for more on how China can potentially cushion the economy against the adverse effects of trade tensions with the US, let's bring in currencies expert now, Peter McGuire, who joins us live from Sydney. Now, Peter, first off, are the trade tensions with the US contributing to the Chinese currency's weakness? And is the trade war evolving into a currency war?
Well, firstly, I think you've got to look at where the US dollar has traded over the last, 5 to 6 months, and it's been a very, very solid uptick, around about 8 or 9%. So there's the first side of it. As far as trade wars are concerned and currency wars, where I think we're at the starting phase, the Chinese economy, as far as the stock market's down nearly 19% in the last, 6 months. So it's been a very, very solid fall there. So that needs to be taken into consideration also. And there are many moving parts to this whole conversation.
Right. Now, we know that a weaker currency actually helps Chinese exports, but ironically, what we're seeing is the central bank trying to actually prevent the currency's weakness. So is there any evidence that at all suggests the Chinese are trying to manage the trade spat with its currency?
Well, they're conscious as far as those falls, and there's no doubting that, and there is moves from the PBOC as far as what they can do and the levers that they can take. It's a global situation as far as US Fed raising rates, and that's also underpinning US dollar, which in turn can weaken the Chinese yuan or renminbi. Right. So it's an early phase of all this, and it's just a work in progress on many different angles.
So what other tools does China potentially have to help cushion the effects of this trade spat?
Well, it could look at backpedaling as far as pressuring North Korea and backpedaling on their particular issues as far as trade negotiations and, of course, nuclear negotiations with the US economy and the US Fed and, of course, President Trump. You could also look at subsidising the internal workings as far as manufacturers and other companies and so on inside China itself, similar to what the US farmers are achieving. And then you could look at a bigger, vast array of different options, even to the point of China selling US treasuries, which in turn would ramp up US interest rates, and that could cause inflationary issues to the US.
And that's one of the potential effects that we could see from this. Thank you for joining us, Peter McGuire, there in Sydney.